Hmm. Cheers. End of the week, and what a week. So, on my roundup this evening, I'm not going to focus on lots of granular levels of detail on the various rules and regulations that have been put out by the government this week because they're all available for you to read. They're either on the internet, and actually we've created a dedicated page on our website if you want to go there, called COVID-19. And everything you need to know there as a business owner, you will find. So what I thought I'd do is I'd do my roundup of the week and focus on the winners and the losers, as was conveyed to me today during a Zoom call with a local MP, Kevin Hollinrake, who was there to help clarify some of the contradictions that are in the legislation. And that's what I'm going to convey to you right now, and hopefully you do not fall into down the cracks that the legislation, naturally rushed as it is always going to produce. So I'll break it down into the various grants and the various support, should I say, that's available for businesses. Let's start with the business rate grants of £10,000 and £25,000. Some of this you're obviously already going to know. So any business that has a rateable value over £15,000, you're not going to get one of these grants. Also, if you're a business that has employees that work remotely, and therefore you don't really have a business premises, but you could have substantial employees. I know businesses that have got 30, 40 employees that work remotely at home. They've got substantial overheads. And bearing in mind that they use the business rate system to get grants to businesses to help them in general, not necessarily just with their property overheads. Then some businesses that still have substantial overheads that just don't have a rates bill, you're not going to benefit from that either. Businesses that sublet from the landlord, and actually the landlord picks up the rates bill as part of their rent agreement. It's the landlord that's going to get the grant and not the business, bizarrely. Some business premises are also empty but paying rates. They're also entitled to the grant of £10,000 or £25,000, it would appear at the moment. And there's been some clarification that I just thought I'd convey to you of businesses that fall into retail and hospitality, and it's on the government's website now. There are some oddities. Estate agents and funeral directors fall into that category as well. There's also the business rate suspension program. This is for anybody in hospitality for 2021. You won't pay any rates. Any business that doesn't fall into retail and hospitality is going to continue to pay rates. Okay. So on the job retention scheme, the 80% for furloughed workers, if you're an employee that started a new job after the 28th of February, this could be your first job ever, or it could be that you just changed employers, forgive me. Therefore, you were not on the payroll at the 28th of February, and that's the qualification date. So you're going to fall between the cracks there. Again, that's just one of the losers. You are likely to be, hopefully, you will be put on, you'll be laid off. But worst case scenario, if they can't recover 80%, you're going to be made redundant. Bundle of joy, aren't I? Okay. A question that's been raised all week, and we've been waiting for hopefully some clarification on this, and a positive one. It's not good news. Directors and shareholders that pay themselves in dividends as opposed to salaries, they are not going to give you furloughed rights over the dividend payment, despite the fact that it is quasi salary. It wasn't lost on me, actually, during the exchanges today and on some of the other forums that I've been on, that the government have got this kind of almost like a "we told you so" attitude towards direct shareholders that are paying themselves a dividend. Obviously, they've been trying for years with the various changes in legislation to make dividend payments more and more unattractive. But it is legitimate. It's still marginally beneficial to pay yourself in dividends from a tax perspective. But it's pretty clear from the messages, both in budgets over many, many years, and particularly in what they're doing with the COVID support, that they do not want any of us to pay ourselves dividends. Okay, let's move on to the self-employed income support. This is where if you're self-employed and you earn less than £50,000, you will get 80% of your average profits up to a maximum of £2,917. The first thing is, it's not, there's no cap. So if you earn on average £49,000 in profits, you get the full 2,917. If you earn on average £51,000, you don't get a bean. There's nothing. Why they didn't cap it in the same way they did the job retention scheme, I don't know. They've just had a cut off, and as has converted to me today, this is one of the losing categories. I think that this is the biggest contradiction, though, and let me just explain this. If you're a self-employed individual earning, say, £48,000 on average per year, you are going to get £2,917. And you don't even have to stop work. In fact, your profits don't even have to go down. You could have a more successful year in 2021 and still be able to claim the £2,917. Compare that to a director of a company, an owner manager company, who may be running exactly the same business as you. He just chose to use a limited company instead of a sole trader or partnership as the vehicle to trade with. He cannot work at all. He's furloughed. You can't do any work whatsoever. Incidentally, it was also confirmed today that if you're furloughed from your existing job, you can't go and get another job elsewhere. So you can't get furloughed from your job in a bar or whatever and get a job working for Tesco's stacking shelves. You just can't do that. You cannot do anything. You can't have any employed income if you're furloughed. But how about that contradiction between the income as a self-employed individual and that as a furloughed director of a company? What else was talked about today? Okay, so some people have been reporting back from the banks applications that they've been doing that they're getting asked for PGs. The government are aware of this, PGs on the less than £250,000, which of course is supported by the CBIL scheme. The government are aware of this and they are going to speak to the banking industry. In fact, there's been a new resolution service set up. It goes live on the 1st of July. Business Bank Resolution Service. You will be able to effectively complain about your bank and, I guess, enter into some kind of mediation with them if you think that you've been treated unfairly and should have had a better crack of the whip when it comes down to the rules. What else is there to talk about? I'll end with a bit of a funny, I think. We had one client who conveyed to one of his employees that he'd been furloughed and would be getting 80% of his pay. And the employee was really pleased because he thought not only was it 80% of his pay, but he was going to get his contractual salary as well. So he was going to get 180%. And he was absolutely furious when my client told him, you're getting the 80% that's designed for you, and ended up shouting and screaming down the phone. So my client ended the telephone call by saying, I tell you what, you're not furloughed, you're actually redundant. Anyway, hope you all have a nice weekend. Cheers, guys. Take care.